Hello and welcome. In this video, we will learn about gaps. Okay. First, we will learn what a gap is, and then we will learn the different types of gaps. Okay. Now, price generally keeps moving up or down. Let us say that this is the movement of price of a particular stock. It has been moving up from past few days. Okay. Let us say this is the candlestick of yesterday. Okay. Yesterday, this was the high. This was the high. Now, today, the candle opens here, or the price opens here, moves up till here, comes down till here, and closes after reaching this point. Now, if you look at the high of the previous candle and the low of today's candle, there is a gap. There is a space, correct? This space or gap is called as gap. If there is a space between the high of the previous day's candle and between the low of today's candle, then it is called as a gap. Okay. Now we have to look for gaps in day chart, because in normal 5 minutes or 15 minutes it doesn't matter. Alright, the gaps do not matter. Now this is about price moving in up trend. Let us look at price moving in downtrend. This is price moving in downtrend from past few days. This is the low point of yesterday. Okay, and today it opens here, moves down and closes here. Okay, this is the high point. There is a space between yesterday's low and today's high, and this space is called as a gap. Okay, gap. Now, there is no rule that a gap should be filled or a gap fills. Okay, there is no rule saying that gaps will be filled. All right. Now, as I said, there are different types of gaps. Some gaps act as support or resistances. Some gaps fill up quickly. Okay, so let us see them one by one. Now, what is a gap and why does it happen? You see, gaps are reactions for news or events. Okay. Now, generally the companies release their results or any news related to companies after the market hours. Okay. So the market closes at 3:30 p.m. After 3:30 p.m. the companies generally release their earnings report or quarterly results, and also any events. Okay, if there is any case going on, the result of the case, or if there is any penalty upon the company, everything will be released after the market hours. And the next day, the reaction of the price to the previous day's event is this gap. Okay, is this gap. Let us say this is yesterday, and yesterday evening the company released their quarterly result, and it was very good, and so people are willing to buy the stocks at any price available, and that is the result of this gap here. So there is a gap and price moves up. Okay, let us say that this is the candle of yesterday, and let us say yesterday the case upon the company was a failure, and there was a penalty levied upon the company, which is a bad news. And so the next day people are willing to sell the stocks at any price available. Okay, so the price goes down, and this is the gap that you see here. So this is the void or the space where there is no price action, where there is no transaction. Okay, so the gaps are results of news. That is all you need to know. Okay, now there are many types of gaps: runaway gaps, breakaway gaps, common gaps, exhaustion gaps, and there is also one more, island gap. Okay, now let us learn what these are. Let us start with runaway gap. Okay, see, the price is moving up, 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 and suddenly you have a gap. Okay, now this is yesterday's, let us say this is yesterday's high, and let us say today the price opens here. Okay, and it moves up, and in future days the price keeps on going up. Okay, up. So if that happens, then it is called as runaway gap. Runaway gaps means the gap happens in the direction of movement of price, and the price keeps on moving in the same direction. Meaning, see, here the price was moving up, correct? The price was moving up, and there was a gap up, meaning it moved in the direction of the price, and after that the price kept on moving up. Okay, kept on moving up from here to, it kept on moving up. If that happens, then this is called as a runaway gap. Okay, now the runaway gaps act as support or resistances. Now here it will act as support. So if you see here, the price came till here and then went back up. Okay, and when you compare this line and this line, the bottom line acts as a strong support when compared with the top line. Okay, so here there is no rule that the gap must be filled subsequently. There are gaps in the market right now which have not been filled from months and also years. Okay, price may come down eventually. Of course, the price keeps on moving up and down, correct? That is the nature of the price. Price coming to a support level and moving down doesn't mean that it has come to fill the gap. All right? Yes. So this is about price moving up. Let us take an example of price moving down. So here you can see the price was moving down. The price was moving down, and suddenly you have a gap, and then price kept on moving down, and then once again you have a gap, and then price kept on moving down. So this is also a runaway gap, because price was moving down or coming down, and you have a gap in the direction of price movement, and the price kept on moving down. Okay, and if that happens, then it is called as a runaway gap. And here the gaps act as support or resistances. Here in this case it will act as resistance. So here the top line acts as a strong resistance when compared with the bottom line. Okay, now this is a part of this chart. The part that I showed you was this. You see, we have a gap here, we have a gap here, the price comes down and it tries to move up, and you can see that this acts as a resistance. The price came down and it went sideways for few days, it came up and then it halted here. Okay, it broke, came down, gave a break here, and it moved up here. Okay, so there was a breakout here. Then once again this acted as a resistance. Once again there was no breakout and the price came down. Okay, so you can see that the gaps act as strong support or resistances. All right, yes. Next is breakaway gap. Breakaway gap. See here in this chart, this area was acting as a resistance zone. Okay, this area between these two lines was acting as a resistance zone. Now the price came till here, and the next day the price opened with a gap up and it crossed the resistance. Okay, the entire resistance was crossed and the price kept moving up. If something like this happens, then it is called as a breakaway gap. If the gap breaks away either support or resistance, then it is called as a breakaway gap. Here in this case, the price has broken the resistance and moved up. Okay, once again, this acts as support when the price comes to this level in the future. All right, next we have common gap. See here, the price was moving within a range. Okay, moving within a range. When you do not have a downtrend or a uptrend, or you do not have a support or a resistance to break through, and still if you see a gap, then it is a common gap. Okay, it might be for any reasons. Okay, it might be for any reasons, it might be for an event or anything. So if it happens in a downtrend or an uptrend, then it is called as a runaway gap. If it jumps a support or resistance, it is called as breakaway gap. But here we do not have anything, but still we have a gap here. Okay, so we have a gap. So this kind of gap are called as common gaps, and common gaps gets filled quickly. Okay, meaning the price comes to that level. Okay, price adjusts itself and comes to that level. Okay, so this gets filled quickly, and this is of no significant importance. This doesn't act as support or resistance. All right, yes. Next is exhaustion gap. Exhaustion meaning getting tired, correct? So we generally see them in an uptrend. See, the price was moving up and we have a gap here. We have a gap. When we see a gap in an uptrend, generally we think that it is a runaway gap, correct? The price kept on moving up. But what happens is, after few days, price reverses and comes down and fills the gap also. It is only then we come to know that this was not a runaway gap but an exhaustion gap. Now what is an exhaustion gap? Exhaustion gap is a gap which is created at the end of a trend. The buyers were active here, people bought here, the price moved up. It moved up, it jumped, and the price kept moving up. But what happened was, the buyers got tired, or the bulls got tired, and due to that, the sellers overtook them and started to move the price down. Since the buyers were exhausted and they were not able to sustain the movement still further up, the price started moving down. And the gap that happens there is called as an exhaustion gap. This is due to tiredness of the buyers. And only when you see something like this, a trend change happening, you come to know that this was not a runaway gap but an exhaustion gap. Okay, and this gap signifies a change in trend. Okay, so now it is from uptrend to downtrend. Okay, so these are the different types of gaps. We have one more type of gap which is called as island gap, where we have an exhaustion gap and a breakaway gap. What happens is, we have a gap here, and also a gap here. This gap becomes exhaustion gap because the price reverses, and the gap here becomes runaway gap because the price jumps and keeps on moving down. What is an island? Island is something that is completely disconnected from the mainland, correct? So here too, this part will be disconnected from the rest because we will have a gap here, we will have a gap here. And if that happens, then it is called as an island gap, okay? Not much of an importance and very rare occurrence, okay? So this is about gaps. So know that we give importance only for breakaway and runaway gaps, and the rest are of not that importance. Okay.